Hello traders, Mark Chapman here, the creator of the trademark Trap Traders Concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 1st of February, month gone of the new year already, 2017. A little bit of a funny one today because we've got FOMC later. We've also got, relating to the pound, the Brexit vote, the government vote on whether or not to trigger Article 50, which starts the process for us leaving the EU. Lots of rebellion in the Houses of Parliament, so it's a little bit difficult, and the Fed aren't likely to do anything with the interest rates tonight, but you never know, but that's the general sense out there. However, having said that, the devil will be in the details, so you really want to make sure that you spend some time, read the statement and get a sense of what the focus of the Fed is going forward. See if you've got any types of key indicators that you can gather from what they're talking about that you want to keep an eye on, things like wage growth, things like that, so that you have that depth of understanding. You look at the charts and you get a decent sense of whether or not it's considered positive or negative. If you're unsure, obviously do nothing, but I quite like the look of the pound dollar for a sell. However, at the moment we don't have that, and obviously I'm not going to do anything before the FOMC later tonight. So, but what you might want to do is you might just want to look out for the potential of a trade. Now, what we've got is a level. Oh, my drawing is so bad. We've got a level, and the idea is many traders like to trade previous levels that's supposed to touch, do forgive me, of support that then breaks and then becomes resistance. That's the idea. Obviously that's what occurred in here, and it may happen again, but I wouldn't be willing just to sell off that level if that was how this plays out. At the moment, looking at this price action, there's actually nothing wrong with this price action at all if you're a buyer. This is a daily chart of the cable. If I was a buyer and I was long this, I wouldn't be worried by anything that I saw. It's acting absolutely as you would expect it to. Every time it breaks new highs, it then comes back, retests that prior resistance, that becomes support. That's the idea. There's nothing in that price action that would worry me about this trade, so I'd be happy being long. So when you trading hacks like the way we do, and just so I can define really what hacks and traps, the difference between the two. The hacking element is that we know that traders trade that pattern consistently, right? A certain type of trader, a retracement trader, RT for short. Okay, now that's what they will look to trade. Now then, I'm keeping an eye on that pattern overall, which is what we've just talked about, but I'm also looking at this part of that process and trying to understand, asking myself, it's a really bad question mark, sorry about that, asking myself the question, is there anything wrong with that picture? So that's that, and as I've just talked about, there's nothing wrong with it, right? I would be very comfortable as a trader being long this if I was indeed long this as it currently stands. There's no trap, there's nothing to worry about, it's behaving as you would expect it to. Okay, everyone's a winner who's long. However, if it was to come up into this level and start to sell off, I wouldn't want to take the trade because that's just behaving like everybody else. I would want to see some type of, just get me a pen, hang on, sorry if I sound a little bit full of cold today, I feel a little bit like that. I wouldn't want to see price come up to that level, and let's say we get some more bull candles into the level. Let's change the colour, and then start to sell off. That is not something I would be excited about taking, because again, that's just acting like everybody else, and everybody else usually doesn't make any money. Now, it doesn't mean that that's not going to follow through to the downside. All it means, though, for me, is that that is just price action acting normally, and there's no real particular edge of any sort under that type of scenario. What I want is I want buyers to get into a little bit of trouble up here, and also indeed potentially the sellers. So I would want something to happen that maybe looked a little bit like that. So price comes up to the level, so there's the level, and it sells off. Now why that's good is because what will happen is you'll get those sellers, those level traders, retracement traders, retracement traders, sell off that level because that is starting to act as they would anticipate, right? In that type of scenario, even though it is going back up for the second time. Now again, I wouldn't sell it. What I would want to see though is a reaction as if it was selling off, because what will happen is that'll draw them traders in, because they'll believe that price is then going to follow through. But what I would want to see is price come up to the level, start to sell off, draw them in, then catch them, then sell off, and then I'd sell it. So it kind of nails them on both sides like that. So, but of course it's FOMC, it's a little bit challenging because you've got to decipher the statement while, perhaps they did something with the number, not expected, but there's a bit going on, and it takes a little bit of time to obviously get that in all the statement out the way. So you've got to be a little bit careful. You've got to then interpret it and make sure that you're making smart choices. But I would, if it's positive for dollars, then I would look for something like that. At the moment, there's nothing wrong with this picture. If I was long, I'd be happy, and if it comes back into that level, I'd and it starts reacting off the level as they would hope that it would, I'm not interested in going short there. I want that to occur, then it to go against them, and then to sell off, and that nails them, and then I'll be a happy camper buying dollars under that condition. So I hope that helps, guys. So trading, just to make that distinction that I probably didn't explain earlier, a hack is us hacking the trading strategies of other traders. Right, been doing it a long time, probably into my 14th year now. Trademarked all this stuff, just uncovered it. It was there, but very ununderstood, not very well understood. And the trapping element to it is what I've just discussed there. So if we look at the this picture again, there's nothing wrong with it. We want to see people being trapped in this scenario. We want price action to look as if it's catching people, well, not look as if it is actually catching people out. It's trapping them on the wrong side of those trades. So we hack the strategies, then we look for the traps. That's basically the process. And I've got a very specific type of hack for non-farm payrolls. It's also for any major big risk events, referenda, you name it, Brexit as an example, big elections, things like that, even big interest rates, other big risk events. And I'm going to be, I've put a session together for this Friday coming up, so that would be Wednesday, it'll be the 3rd, this Friday coming up, non-farm payroll, first Friday of every month. I'm just going to be doing a live session for this one day only, and if you'd be interested, I've put a link below this video in the description box. Click on it and see if you'd like to join me. If you do, it'd be awesome. If not, I hope you like the content. Look out for the potential to sell this. Obviously, if the news comes out counter, all bets are off. But if it's positive dollar, then we'll look for those traps. If you like the content, hit the like button. Share it with your trading buddies. We all know you're in some type of Skype trading group, or you're on some forum. You've got a trading buddy. Everyone's got a trading buddy. Share the content with them. Do them a favour, and I will see you guys. I'll see you guys soon. Take care.